SoFi is an extremely fast-growing fintech stock that aims to completely dominate the finance space. But while most followers of this stock may be aware of their offerings like SOFI Money, SOFI Invest, or their lending platform, they have a secret weapon which could hold the real key to the company's future, their Galileo Technology Platform. Hey everyone, and welcome to FinTech. In this video, I'm going to be doing an overview of SoFi as a company, talking about their overall business model, and doing a deep dive on one segment of their business, the Galileo Technology Platform, a payments processor that they bought for $1.2 billion back in 2020. So hit the like button if you want, and let's start with a brief overview of SoFi as a company. SoFi was founded in 2011 by 4 co-founders, including Mike Cagney, the then CEO of the company. Cagney was a former trader for Wells Fargo and had founded his own hedge fund prior to meeting his future co-founders at Stanford Business School. It was at Stanford that they decided to start their own company. SoFi started out purely as a student loan company, offering loans to graduate students across the US. But they soon branched out into all aspects of personal finance, from offering home mortgages to a credit card, to more recently their SOFI Invest app, a stock and crypto investing app. They even recently became one of the first fintech companies to obtain preliminary approval for a banking charter. But this growth from a small student loan company to a fintech company large enough to challenge traditional banks did not happen overnight, nor was it all smooth sailing. Early on, SoFi was plagued by accusations around a toxic workplace environment, and all the co-founders except for the CEO Mike Cagney left over the years to start different ventures. All this while SoFi continued to grow. The cultural issues eventually came to a head in 2017 when Mike Cagney left the company amid accusations of harassment. He was then replaced by current CEO Anthony Noto, the former chief operating officer at Twitter, who also had experience as a managing director at Goldman Sachs and as the CFO of the NFL. Noto has led the company into expanding into new areas such as crypto investing, and more recently building in functionality to allow normal retail investors like you and me to invest in companies pre-IPO, something that has traditionally been restricted to institutional investors. Today, SoFi has 3 main businesses: lending, financial services, and technology platform, otherwise known as Galileo. Lending includes what you might expect: student loans, home mortgages, personal loans, and it's their most profitable area. Their financial services is probably the area that gets the most press. It includes SOFI Money, their bank account, SOFI Invest, their investing app, and the SOFI credit card, as well as several other products. Today, they use the approach of using their financial services products like SOFI Money and SOFI Invest to attract new users to their ecosystem at very low cost to themselves. Once that customer is using a SoFi product, they then focus on upselling that customer onto more and more products and into more and more profitable areas of the company, like lending. This is one of the ways the company has managed to grow so crazily fast over the last several years. But now that they also have their technology platform with Galileo, SoFi's even larger ambitions and potential have become even more clear. So what is their technology platform? That's a pretty vague name. Well, that's basically the name they give to all the technology they own, which is not tied to a specific product. It's more of a technology service that they provide. Up to this point, 99% of this technology came from their acquisition of the Galileo payments processor in 2020. But they may have plans to expand on that. So before we get too far into what SoFi is actually doing with Galileo, it's worth taking a look at Galileo as if they were their own company. After all, they did actually exist as their own company up until SoFi bought them, predating SoFi's founding by 10 years. So Galileo is fundamentally a payments processor. They offer an API or application programming interface where, just using relatively simple pieces of code, different companies, banks, startups can use their API to process their payments. Some of the use cases for this are issuing virtual credit cards or enabling digital banking. They offer these services to all kinds of companies who want to use their platform, from small, low-cost startups to multi-billion-dollar businesses. Galileo was founded in the midst of the dot-com bubble in the year 2000 in Salt Lake City, Utah. This puts them as a relatively early entrant into the fintech space, only a few years after PayPal and way before modern companies like Square, Robinhood, or SoFi. Galileo from early on has had a laser focus on the payment space, with category-leading APIs and comprehensive back-office support that made it easy for companies to offer great products to their customers, and let Galileo handle the details around how to process payments for them. Today, there are over 79 million Galileo accounts, bringing in $45 million in net revenue per quarter. Part of what makes Galileo unique, aside from their great APIs, is how well they address all aspects of the payment space. They offer AI-powered fraud detection that results in 80% fewer fraudulent transactions than their competition. In 2020, they launched Galileo Instant, a fast, low-cost way for early-stage companies such as fintech startups, gig economy, e-commerce, and marketplace companies to enable digital payments. And they've already had 1,500 companies sign up to use it. And they've had a great amount of success serving much larger enterprises as well. In 2020, Galileo expanded into Latin America, opening an office in Mexico City and certifying MasterCard's local Mexican domestic switch. They also have agreements with 7 separate Latin American companies, including Klar, which is a 100% digital alternative to secure debt and credit services in Mexico. And also Uala, a powerhouse Argentina-based fintech company that used Galileo to move from just Argentina and into the Mexican market as well. Galileo signed a total of 31 enterprise customers in 2019, a record at the time. In 2020, they signed 41. A couple of companies you might have heard of that use their platform are Dave.com, TomoCredit, and Robinhood. To really understand the scale of the opportunity in front of Galileo, we can look at words from their CEO Clay Wilkes back in mid-2020. With Internet 2.0, it exploded and new leaders emerged. We'll see that again in the world of fintech starting in the next 5 or even 10 years. It's a global phenomenon led by companies whose names you haven't yet heard of, emerging from every corner of the world. India, China, Hong Kong, Latin America, Europe. Galileo is already witnessing this explosion of interest. Fintech is by no means done. We're just barely beginning. And that's what keeps me hungry, motivated, and coming back for more. So Galileo is obviously a big player in the payment space and has plans to get even bigger. So it made sense in early 2019 when SoFi started using Galileo to support payments on their app SOFI Money. This was basically the same strategy that Robinhood was taking around the same time. Build a cash management service quickly and get some kind of offering onto the market, then use an existing payments platform to speed up the process. In this case, Galileo. But what SoFi did next speaks volumes about their plan for the future and their vision for what it means to be a fintech. SoFi believes that the fintech market is going to be a winner-takes-most market, similar to Uber for rideshare, or Amazon for e-commerce, or Google for search engines. There will be one big winner left standing at the end of the day, with many smaller companies in the market that aren't really a threat. So unlike all the other companies that are competing in the fintech space, including larger companies by market cap like Robinhood, SoFi decided they didn't just want to use a payments processor. They wanted to own a payments processor. In 2020, they shelled out $1.2 billion for Galileo, making it their largest acquisition by far. For perspective, looking at SoFi's initial IPO valuation at $8.65 billion, that means they paid almost 15% of their total market cap for this technology platform. And while they get some obvious benefits from this, SOFI Money uses Galileo after all, the acquisition really goes towards SoFi's vision of being a vertically integrated fintech company. SoFi might have had the ability to grab new customer accounts in lending or cash management or investing, but Galileo now empowers them to do customer-to-customer transactions, or customer-to-business transactions, or even B2B transactions. Imagine you have a traditional bank account. When you want to transfer money somewhere, it triggers what's called an ACH transfer, a process that was actually designed 50 years ago in the 1970s. And that's why it always takes 3 to 5 business days for your transaction to go through. Now imagine that you can pick between that and holding an account with SoFi, where you can transfer money instantly as long as you remain inside their ecosystem. Once you start getting into those compounding effects where having more users and more services makes other people want to use your services because of the ecosystem you have set up, that's when you become a true contender for the winner in this winner-takes-most market. It's kind of like Apple with all their connected devices. None of them individually has to be best in category, because once someone is using 2 or 3 Apple products, the cost of switching to a different platform like Android just becomes too high. The ecosystem itself is its own product, and it has its own value. But consolidation in the fintech space is only part of the equation for SoFi and Galileo. The other part is the incredible value that Galileo offers all on its own. So let's now look at some of the numbers behind Galileo's accelerating success. I mentioned earlier that Galileo had 79 million accounts in 2020. This was an increase of 119% year over year. In fact, if we look at the company's last 4 quarters, they have all been above 100% in terms of growth. Now, it does look like that growth may be slowing somewhat from the over 130% growth that they had in previous quarters, but that may just be inevitable as they scale their total number of accounts. Galileo processed $53 billion in financial transactions in March 2020, more than double the $26 billion that they processed just 6 months before in September 2019. In addition to their success in Mexico and Latin America, with them servicing the 3 largest fintechs in that region, Galileo plans to move into 4 continents in the next 5 years, not including North America. But while those growth numbers are absolutely incredible, they may have been helped somewhat by the lockdowns and just a general shift towards digital payment options over the last 2 years. Additionally, while Galileo had incredible transaction volume, they didn't capture that much of the money for themselves. They only had $45 million in net revenue last quarter with a 29% margin, and that was after increasing 138% year over year. While these margins are decent, you might expect a fully digital company to have at least slightly higher overall margins. And SoFi's leadership mentioned this on their earnings call. They said they are currently in the middle of re-platforming Galileo from a bunch of on-premise data centers and into the cloud, giving them a much greater ability to scale. While I would have preferred to see the platform already in the cloud, at least they are recognizing the benefits of investing in making that move now, rather than in 2 or 3 years from now when they have more than tripled their current number of account members and it becomes way more expensive. So while SoFi is obviously benefiting from Galileo's products, Galileo is also benefiting hugely from SoFi helping them to A, monetize better, and B, invest in their infrastructure and technology, with the future goal of putting them at the center of all of SoFi's transactions. The real key here then isn't the numbers that Galileo is contributing directly to SoFi's bottom line, it's mostly strategic. On their website, Galileo shows 5 solutions that they provide: digital banking, card issuing, payments processing, Pro, and Instant. By being vertically integrated across their own banking, credit card services, payment processing, and cash transfers, SoFi will gain a massive unit economic advantage over competitors, some of whom will literally be paying SoFi for the right to compete with them in these areas. For another strategic example, right now SoFi is working on obtaining a bank charter. Currently they have preliminary approval from the FDIC to obtain one, but they still need to acquire approval from the Federal Reserve and the OCC. Galileo, meanwhile, needs a sponsor bank in order to offer a credit card to consumers. So if SoFi obtains a bank charter, they could possibly act as the sponsor bank for Galileo. Also, looking at Galileo Instant, they use this solution to provide services to up-and-coming fintechs. But this may also give SoFi an information advantage when it comes to identifying new up-and-coming fintech startups, either as competition or even as a potential acquisition. So Galileo clearly holds an important strategic position in the larger fintech space. And if SoFi can use their newly gained position to grow faster and capture more market share, it can really act like their secret weapon in competing for this winner-takes-most market. But let me know what you think of Galileo and if you think it's going to be the most important part of SoFi's strategy going forward or not. Don't forget to like and subscribe, and I'll see you next time.